Hey Jay, Happy New Year's.
Happy New Year's to you as well, Jason, or Happy New Year's Eve, I guess, officially, but we are across the
For
world
us,
are
it's Happy
about
New
to
Year's Eve.
celebrate. Yeah, that's right. That's right. Any big plans for the day, for the evening?
No, in our family, we kind of had the tradition of, when we're awake every hour, we, celebrate another New Year's and then go to bed at like 9 p.m. We're all New Year's out. But I
I
think
like
9
that.
p.m. here is London. And I'll be honest with you, London has much better New Year's celebration. I mean, when I was a kid growing up in New Jersey, New York, you think the ball dropping in New York is like the center of the universe. All the other New Year's celebrations are better than that. So
Yeah, okay. I mean, yeah. I've never been to New York for New Year's Eve, so I couldn't tell you how that is even. All I know is I don't want to be in that crowd.
no, you don't believe me. You don't. Um, all right. Well, today we kind of cobbled this together at the last minute because there was a demand on the Discord for you, Jay, to go over how you determine your intraday levels. Um, you're, I primarily am a swing trader, although sometimes I do a little bit of zero DTE stuff, especially if I'm chilling out here and not much to do. Um, so, but you seem to be the specialist in zero DTE. You announce your levels very frequently to subscribers on Discord. So um, tell us what you look at, and we're going to be on here for 2 hours, so you're going to be able to kind of live stream any differences you see as updates happen. I mean, you have live, obviously, um, so you're going to be able to see every 5 minutes. You can check it. This changed, that changed, and if there's any questions about how any questions about like something about new calculations or something, we can discuss that as we go along. This is 2 hours, and this was cobbled together at the last second. So we do not have 2 hours of scheduled content. So we encourage everybody watching to leave comments, questions. We do want to direct this live stream to what you want. This is being done by popular demand. Uh, so yeah, come join us and leave some comments. Wish us Happy New Year, that kind of thing. So, with that, Jay, you could start. This is pre-market, so you could start with your pre-market routine.
Yeah, definitely. So really quickly, just for those also viewing and curious about what widgets and things of that nature that I have. So I kind of call this like my zero DTE section, where I essentially have the zero DTE widgets for, a couple of or a few of the key indices, right? So IWM, SPY, SPX, and QQQ. Obviously, Charm, very important kind of for dealer power hour, call it post 2 p.m. Eastern, but I'll kind of have Charm Zero DT there to kind of guide me throughout the day.
Yeah.
So that is on display for me here as well. My all expiration Vana is always handy for me. Obviously, there's maybe a lot of noise in between here that you need to zoom in on. So I'll have quick access to my all expiration Vanas. But then more importantly, here's kind of like where the real magic starts to happen from a zero DTE standpoint. I'll have my Vana broken out from a zero DTE standpoint, a weekly view, and then 0 to 30 days view, just to kind of see the differences and the compare and contrast. Essentially, Van exposure is another major one. For those who are following the Discord channel yesterday, before we had that sell off, and I think you even posted around the same time I saw it as well, Jason, was as we were entering the highs of yesterday, the
Yeah.
Van exposure completely flipped to like a sell mode, right? And maybe we can show that throughout today here, but it called that sell, although we went up maybe 5 more points from the time it flipped. But after that, it was like a 30-point drop, right, to end that
Yeah.
day yesterday. So Van exposure, very, very important, and basically same time frames, zero DTE weekly, 0 to 30 days. Of course, to Wiz's point, even if you're swing trading or not swing trading, it's always important to know what the all expiration Vana is doing. So are we in a cluster of chop, buy, support, resistance? That's also kind of critical to help me shape my thesis. I won't get into all the details here of the other ones, but essentially what you'll see is from a delta standpoint, I'll look at it from a 0 DT with calls and puts separated. Look at it from a weekly standpoint and a few different expirations, all expirations. Gamma or DAG will also come in hand here. I'll quickly look at that. I won't get too much into the 3D visualizer. There's a whole video that, Jason did here recently on that, and maybe we can showcase that a little bit later today. So those are the widgets. Just wanted to kind of level set everyone here what I'm looking at and what my widgets are. So with that, Wiz, let's just get into today's kind of like pre-market routine, if you want to call it that. So basically for me, my routine here is to start building a thesis. This doesn't mean that this is going to work out 100%, just like a football game plan or a basketball game plan. It needs to be dynamic, but there needs to be a thesis, right? My opponent is going to do this if this happens potentially, right? So same thing here. If market price action does X, dealers are going to do Y potentially, right? So that's a little bit of what I'm looking for as I build my trade plan. I'll seek any news catalysts. Obviously, today we had the home price index at 9 a.m. Eastern, so it's long gone and done now, out of the way. So there's not a major news catalyst. So for me, at least, that sets my mindset like, hey, there's not FOMC later today, so I have more volatility potentially, right? So just something to keep in mind. And then from there, really, I jump into the Vanas, right? So we'll kind of get into the Vanas specifically here, but I'm just giving everyone an outline of what my trade plan consists of, why I'm doing what I'm doing. I'm very curious about the VIX and Volland still. I know a lot of people don't chart the VIX or care about the VIX. I do. At least I want to know the range I'm within. Are we closer to 14 or are we closer to 18, right? Closer to 18 is going to bring more range, more volatility. It's going to expand that range, obviously, as we're in the trading day like yesterday. Whereas if we're lower in the VIX, we're not going to have a lot of that volatility, right? And so based out of that, I build a thesis, right? So for today, a little bit of my thesis was, we have some minor resistance, kind of that SPX 5910, 5915. There's some negative Vana there. It's a little bit on the weaker side, and clearly we saw that in overnight action, although kind of held as resistance for quite a bit overnight. We broke through it, and then we hit where a positive magnet would come in, which is 59.25. And we actually hit that overnight a little bit ago, I should say, in overnight futures action. So what happens above 59.25? Well, you have a zone of 59.30, 35, negative positive Vanas. A key pivot zone is what I'll call those, and I'll show you that visually as well. But then above that, there's like just pure resistance. And we'll see that and what I mean by pure resistance above that level. And so my bullish bias, like we hit a lot of these levels overnight. Unfortunately, that's how life works. This is why I trade overnight futures, Wiz, is a lot of these moves occur overnight or can occur overnight. So Volland is just as great in the regular trading hours as it is overnight. So this is my thesis today. Like I ultimately want to see how 59.25 reacts, but I'm not looking to long the market at these levels, especially where we're at right now, Jason. It can go higher for sure. 59.50 is a potential here. But if we kind of jump into our Vana, at least for what it is right now, I mean, it's going to be choppy today. Anytime you see a Vana exposure that is not, let's say, nice and linear, almost like a U or V shape, if you want to call it, it's going to tell you there's chop. And until this starts to flatten and kind of ease itself, you're not going to have a nice, consistent flow. So quickly pause there. Maybe, Jason, if there's anything you want to comment on.
Yeah. Yeah, my kids were here for half of that. But anyway, Catherine came up and started working out in the little gym area we have. But anyway, yeah. So as far as like the chop goes, it's not just the chop. If you zoom in on the y-axis over here, on the y, like you see, it's not very much. That's what is that? A couple million.
Yeah, like the top end here is 450 million here, and then your
450
bottom
million.
end.
Like the typical Vana areas, we're looking at like 10 billion is like the average. So 450 million is very low. That is, and when you were saying we're going to see chop, it's not just going to be chop because of the low aggregate Vana. We're going to see it's going to be volatile chop and probably thin volatile chop. So I think that size down and know your bounds, and that's really the plan that you had before where you're establishing your bounds. That's a big deal. I think the other thing too that I discounted for a long time, and it was between you and Phoenix on the Discord and a couple other people, showed me the impact of looking at Vana, not just all expirations, but also for the weekly, for the monthly, and then for the day. The day I still kind of use Charm because I don't know, it's what I'm used to, and Charm is just going to show you basically Vana. But that Vana in that 1 week time frame does decay a lot quicker than the 1 month time frame. So to have that in mind as well was something that I discounted for a long time until you guys talked to me about it, and then I thought about it, conceptually, and I'm like, you know what? There's a good point to that. There's something to that. The other thing to note about this choppy kind of Vana thing too is normally it's, institutions are very mechanic about how they trade the options. I'm buying this put, I'm selling, this delta call, and that's it. And, when you see that linear thing, the institutions are just executing their strategy and the dealers have to hedge it accordingly. When you see it choppy like this and low, that means they're not executing the same way. This is kind of more, I don't want to say retail. It's not really retail, but it's more speculative activity.
Yeah.
And when you have speculative activity, you're going to have less, speculative activity by definition is less predictable. And because it's people's opinions more than it is a mechanical institutional program. So speculate. So it's gonna be difficult. So I mean, this live stream, if you succeed very well in this, Jay, this live stream is going to show off Volland pretty well because if that's the way we're going, if that kind of like speculative, choppy, volatile, I would take the levels that I see and add like 5 or 10 and say that's where I'm going to go. But yeah, I think
yesterday was like a prime example of this, and that's when everyone kind of saw, I assume the world of Twitter and FinTwit, right? There's a lot of people calling for the immediate bounce, right, at the market open. And while we did stay above 5,900 and Hug did, I was like, I'm not seeing that in the data.
Right.
Right. And that was why I was still bearish. And then, you kind of posted an update around 10 or whatever it was. Right. And then I saw the data update naturally too. So voila, here we get the reversal out of, the 58.75 level yesterday. So the other big thing for me, just I'll share it here for everyone, or it's in the Discord as well. I do have my trading plan just to call out for everyone. One of the trading strategies for me personally that I love using Volland, and so on failed breakouts or breakdowns, right? Especially at key Vana levels, for example, like yesterday, 58.75 was like a key Vana level, right? And that suggested either if it breaks, you go to 58.50. If it holds, you're probably going back to 5,900, if not higher yesterday. So those are great. Like 58.75, you stayed, we sold below it. We hit 69 yesterday and then bounced right off from it and off we go, right? So these are good opportunities. When I use a failed breakdown, it doesn't mean, hey, it hits 58.75, go long, right? Let it bleed a little bit. And then if it comes back, takes over that specific level, now you got, whatever you want to see. So I think markets open was
market's just open. Do you have like
a
some
chart?
kind of like
Yes,
trading
I
view or
do.
something that would show the?
Here you go. So I personally myself like to have, and I'll kind of showcase everyone here what we're looking at. So I like to have the VIX on one side. I'll look at ES. Obviously, I have other tickers that I'm also looking at constantly, but I'll keep these two in view here. Then obviously, Volland will be my next area of view. So just for everyone's, we'll give it here. I always wait for the first 5 minutes. Like I'm not, if I was literally trading right now, I'm not trading something within that first 5 minutes unless a key level is breaking. We haven't tested it overnight. So there are some criteria, again, my trading plan I have here, but right now I'm just an observer. I'm just reviewing what the market is doing. I'm looking at the charts. I'm kind of going back and forth between Volland and here and just waiting, right? So I do lay out, and I need to work on the API here. I've been a little bit busy and lazy, I should say, but I'd love to get this automated with the APIs, but I do come in here manually. Those key Vana levels that I highlight my trade plan, I just put it here. It also helps me do the SPX to ES translation a little bit easier as well. But if you notice here, like anyone looking at a 30-minute chart, like this 59.25, I kind of even called it out, would be an area of resistance. We hit it. And I mean, if you look at it, if you're just a chart pattern expert, there's sellers. Look at that. Boom, hit, sold, hit, boom, sold, hit, boom, sold. Now you're making lower lows on all these candles. So like, you can clearly see our thesis so far of this zone being resistance, it's holding. And that came from Volland, right? So that's thesis one there. And obviously, now we wait. We got two minutes here, and I'll kind of look at the levels, right? Nothing has changed from the plan. We're still at a key critical level. Now it's just a matter of patience. A lot of people think that when you're trading, you got to be doing something constantly. And no, it's not about always trading, not always about doing something with your account. It is
Only
just
Mitch.
patiently waiting. That's right.
Only Mitch, right?
That's right.
Yeah. So really quick, can you go back to your trading view?
Yeah.
How did you choose which lines to put there? I mean, there's Vana lines everywhere. What are your thresholds?
Yeah. So for me, for example, if I'm going to go back here, I like your graphs a little bit in your platform. So to me, these like big green Vana levels, the bigger red Vanas, obviously those will be key areas of interest. So I mean, 59, for example, overnight, we tested that multiple times. That was a key area of interest. And what I'll look at is like 59, for example, when we get to that level, what is the VIX doing in relation to that level? Or is it spiking, increasing, decreasing? If I'm a bull, obviously when 5,900 hits, I want to see that VIX decrease, right? That's going to give me that conviction that this is going to hold. Although as a magnet, it's not going to hold as support, and off we go pushing it up, right? Now, whereas this holds, now the next area where I'm, again, my thesis, VIX going down, volatility going down, price holding below. So where's the next magnet per se? Up here at 59.25. So that's where I build my thesis. Now I'll look here. Okay, we have a negative Vana, quote unquote. I'll call these minor resistance, right? And yeah, overnight we hit that level. It took us a few hours to chop and consolidate there, and then off it went. Now in a regular trading hours, we just rip through a negative Vana like this, right? Overnight, a little bit of different story when we're not as liquid. Did that help answer your question?
Yeah. Just kind of, I'm looking at I was looking at your trading views. Some of them ripped through, some of them held. I mean, it seems like almost every turn held some line there, one way or another. So I guess my question is like, what would be your risk management here? Like you see here, there's that huge bar that goes up and it slices through those two negative Vana mediums.
Yeah.
Right here, this huge bar. Like how do you risk manage? Like what is your trade plan on risk managing for something like that happening?
Yeah. So my thesis, like going prior to this, would be like, hey, if we enter here, obviously I'm not entering a long, right? Like that's thesis number one. I'm not going to enter a long into a key critical level above spot or a resistance. So number one there, just because you hit a level, pop above it doesn't mean jump right in, right? So that's number one. If anything, my thesis going into this was that I would short 59.25. So there's two ways you could do this, right? One, like, yeah, as soon as it spikes into here, you have your resting orders, right? And then what I'll use is this 59.30, the next kind of negative Vana there. That's my stop loss. Like if it goes above that, my thesis has now been invalidated. I'm completely wrong. I don't want to stick around for waiting to find out if I'm right or not. Based on the data, the conviction that I have of the data, and then my thesis of the data, that's what I'm going to set. I'm going to find an entrance somewhere here. I'm not going to find the top, obviously. I would have probably said, okay, we had a close above. Let me see what the next candle closes. And then what I will do is I start to drop in time frame here, Wiz, right? So I'll look at a 15-minute chart. It's kind of saying the same story, but look at this rejection candle, and we also had an inside candle. So to me here, we popped, found sellers. Then we tried to get back up again and rejected again. And then the third candle finally was like, just get out of here, right? So here you're now looking at that conviction. And then you can drop into smaller time frames to further look at that. What does that look like? Are we bullish, bearish from a chart pattern, whatever you want to do? You have those, capabilities there to look at it. So does that help answer your question there too?
Yeah. I mean, yeah, it's very interesting because I mean, the primary way I trade is using options, and that people, some of the people I trade with, in our fund, call them Franken spreads, like there's a butterfly over here and then like a vertical over here. And, maybe like an additional couple, instead of a 1-2-1 butterfly, it's 1-2-2, which we call the hawk. Like things like that. Like I do Franken spreads to try to accept the risks that I'm willing to accept and not be there every 3 seconds ready to click a button, click. But it seems like a lot of people are button clickers. I got to get in, out, in, out, in, out. So, that's my trading style is completely different. And the question I just asked you is my biggest problem. If I were a button clicker, how do I see these levels, but they're not always going to hold. Like what is my risk management process in that scenario? So
I think here's the key thing is everyone's looking for someone to be right in the market. And if that is your thesis that you're going to be right every single time you take a trade, like first of all, you don't even know trading. Like anyone who's predicting 100% like hit rate, just run away as far from that person as you can. No one has 100% win rate, right? I think here is like what I like to look for. Again, let me just kind of go. If you don't mind, we did have a 5-minute update here, and I do want to highlight, like, this is Vol Live, why I love it so much. Like, you saw here increase in resistance in 59.35, so out of the money puts, right? So you saw that spike. Now, again, we were trading near 59.25 when this update occurred. So my thesis here, again, just looking at this fan exposure is, it's going to take a lot of decrease in volatility. It's going to take a catalyst of some kind, something to break this resistance here. And right now, this is not what I want to be longing into if I'm hoping that that's going to break. So again, you can hope all day long that we're going to break 59.25, or you can be smart about it and use the data and build a better thesis to say, hey, I should short 59.25. And if I'm wrong, okay, hey, that's part of being a dynamic market, right? But at least I have the data, and if I'm wrong, you know exactly where to set that stop loss, right?
Where is that?
So for me here, this would have been 59.30, right? Because after that, now again, this one here, like this to me, I would have stayed short just seeing all this. But for me here, like if I'm looking at this, I would have even gone as high as 59.35 for my stop loss on that entry based on this Van exposure here. But I feel pretty good about how this looks. And if we just quickly bounce to the market here where we're at right now, I mean, look at it, Wiz.
Oh, look at that.
Look at that 59.25 resistance, right? Again, folks, like this isn't some miracle weight loss type of product. Like this is pure data.
Not
math.
Ozempic.
Not Ozempic. Yeah. Well, I mean, hey, maybe you are the Ozempic of platforms and data, and you should be proud of that.
Yeah.
So.
Unlike Ozempic. I mean, it's weird that Ozempic has like a shame associated with it. If Volland is the Ozempic of the markets, you're not ashamed. You're just like, oh wow, you found a secret code. Anyway,
that's right. But here's the big thing. Like our thesis was resistance, increase in VIX. Again, like VIX is right now like super easy. It's the volatility of the index, right? So until this changes, like again, if you're an intraday trader, if you are not using these two in cohesion, like I don't know what to tell you. Like I can't help you beyond that, right? Like Vana, if you know what Vana is based on, is one of its key criteria is implied volatility, right? So obviously the VIX for individual tickers. Maybe Wiz, you can kind of talk about Volland here and how we look at VIX or implied volatility for individual tickers. But at least for ES, the VIX is that, right? So you have a nice chart, you can look at it and so forth. Now for individual tickers, we've got spot vol correlation. We have widgets within Volland, right? So
yeah. So
you want to talk about that?
Yeah. How quantity do we want to get? I mean, we have 2 hours, and I don't know how. Anyway, I don't want to like lose people's interest by getting complicated, but I guess that's why people are here, right? It's to learn. So,
just really quickly for the people who are watching, just really quickly for those who are asking in the chat room, just because I'm kind of watching on here, how do where am I taking that short from 59.25? Well, look at like the areas we flipped, resistance, right? And I'll go back to my trade plan here. 1 second. So the areas where we called out where we had flips, right? So for example, 59.10.15, 59.25. So we rejected 25. Price will go back and seek now 15. Remember, Vanas will flip as we pass through them, right? Negative to positive, positive to negative, right? So you almost have to not think of like the reverse factor, right? So what was red before when we passed it now becomes green. So now as we go up and then go back to test it, that green now becomes that magnet essentially, right? So that is one way. So 59.15 below 59.25, like this would have been my first zone. We'd sell, come down into, and then see a reaction. And if I look over here, what do we have? You came right into that zone, 59.15, 59.10. You came, you sold into it, but you had a reaction, right? So that was that first support level there. Sorry, Wiz. Looks like I might have lost him. So I'm going to keep talking here. He might be frozen for the time being. So hopefully, I hope that answered your question there. Wiz is back. Wiz, do you hear me?
Yeah, I don't know what something happened with our FiOS again, I think, because Jill froze too.
No worries. No worries.
Anyway, so what were you saying?
So just to give you a quick recap, I was just taking through the viewers. Like someone asked the question, how, if you shorted 59.25, where do you know where to take it to? Where's your target? So I kind of walked everyone through, again, building my trade plan and my thesis, right? Which was in order to get to 59.25, you have to take out these two negative Vanas, right? So as we flip negative Vanas become positive Vanas and vice versa, right? You almost expect now when you're coming back down, this will be the first zone that gets targeted. Then the next one here, right? So 59.10, 59.15 XPX would be where I would take the short from 25 down. And if we go to our charts, that's exactly what happened, Wiz, right? 59.25 sold right into 59.10, and we bounced, found some support here, and now we're starting to consolidate.
Very good. Very good. All right. So I'll talk a little bit about this is quantity. This is not as it's something to base your trade plans on, but it itself is just kind of more general theory of what we're talking about. So Vega obviously is your P&L as it relates to implied volatility. It is the first order Greek. First of all, there are several variables in an option, and it's all based on its pricing, because option is a derivative product. It's not the actual underlying. So since, to go way back into super basics, an option is a contract that the underlying you have the right, not obligation, to buy or sell a certain amount of the underlying at a certain price by a certain time. Okay. Sometimes that price is in the money, sometimes it's out of the money. So, and in most cases, and we're just assume for the sake of this live stream, in most cases that amount is 100 shares of the underlying. All right. So there are, what we could get into the intricacies of American versus European options. Can you exercise prior to expiration or whatever? SPX is it's called a European option. You cannot exercise it prior, and settlement comes in cash because there are no SPX shares. So it comes in cash. This is end of year. This is 12/31. So it would also be appropriate to say that SPX and any cash settled option has a certain tax advantage, in that part of it's a 60/40 tax advantage, where part of your returns are short-term gains and some of them are long-term gains. Most of them are long-term gains. We could go into the history of that. We're not going to bother. It's called Section 1256. I mean, we're not going to bother doing that. But for the sake of what we're talking about now, that's a little bit of very basic background. Because of those variables, which is at a certain price, so that is called the underlying, or the strike price. The underlying is the actual equity. So whatever price that gets to, that's and that the price of your option in relation to the underlying price is called delta. Delta is a lot of different, delta is basically the crux of all options pricing and delta hedging and etc. It's called delta hedging because it gives you the number of shares that would be required at this moment to hedge your option with the underlying. All right. So if you're at a 50 delta option, that means it would require 50 shares out of a 100 share option to hedge to hedge your option. Okay. Delta also represents sort of the percentage chance that your option closes in the money. It's almost like a distribution curve. When you look at delta, it's more like and you see 50 delta, 60 delta, 70 delta. You obviously have to minus 0.5 anything above 50, but then you form a distribution curve of what the market expects the possible returns of that option to be, or really the possible returns of what that underlying will be. Sorry. And then there's the price of the option itself. Now, options by definition are a insurance product. Okay, that's what they were developed for. So institutions would say, let's say there's a hedge fund that only trades Apple, and they have 100% of their portfolio or 90% of their portfolio in Apple, and they just scale in and out of Apple depending on whatever reason they are trading Apple. Instead of just selling Apple, they can buy insurance on their portfolio. And that insurance would come as in the form of an option where instead of selling off some of their core position, they can buy something with gamma, which we'll explain later, with gamma that can exponentially increase in value as the price goes against that Apple position. Now, why does it increase exponentially in value? Well, because there's a time limit. It's like term insurance, right? If anybody has gone life insurance shopping, there's term insurance and there's whole life insurance. Whole life insurance is usually more expensive, but yet you get to, there's like a mechanism in which you get to keep your money that you put into a pot. And it's basically like a savings account, with a benefit if you die. Term life insurance has like a cutoff in time. And because it has that cutoff in time, it's way, way cheaper. And that's kind of how the option relates, right? It's way, way cheaper to do this option because it has that cutoff in time. All right. Again, I am very generally comparing here. And, I'm trying to boil down very complicated concepts into relatable language. So we have these insurance products, right? They have a premium associated with them. And that premium is the implied volatility. So, just because you are a certain distance away from the strike price, the price of the underlying is a certain distance away from the strike price, does not mean that there is a static price for that option. If there's a hurricane coming or, Donald Trump is about to tweet, right? That expected volatility of the underlying is going to swing wildly, right? They're expecting a lot bigger swings than what will happen, right? What we see here in Volland. Oh, thank you, Jason. Appreciate it. What we see in Volland, what we're trying to show in Volland is many, many things based on the options, market, right? One way you can look at the data in Volland is what are customers expecting as far as how volatile the market will be. And that would mean increase in premiums, which would mean increases in Vega. Now, in 1987, in October, they had like an even implied volatility across the plane, right? Yes, the prices would decrease, but the implied volatility remained the same. They did not recognize that momentum, especially on downturns, has a very large swing, right? And so in October 1987, they learned that lesson using many different derivative products, not just options, but they learned that lesson very much the hard way, that if there is a 2 standard deviation move, excuse me, it's a lot more likely to be a 3 standard deviation move, and a lot more likely to be a 4 standard deviation move. And on that Black Monday, Black Friday, I forget the day of the week. It was Black Monday. On that day, and there was record set of how far down the Dow dropped, that the market dropped because there was not enough protection on that downside. So the second, the first order is Vega, which is representing implied volatility's effect on your P&L. But there's a second order that measures skew. And, because now quants are smarter, we have a little bit more history. Now implied volatility increases as you get further away from the money. And the reason why is because of that principle that, basically a rolling rock will, you have to have momentum strong enough to stop the crashing market, right? Crashing up or down, really, but mostly down. Fear is a more powerful motivator than greed. So when we have that skew now, that skew is what Vana is representing. Okay. Again, like just to reiterate that, what aggregate Vana in particular is representing is the skew in the market. It is representing how cautious, I guess, the customers are against a very strong moving market. if you have low aggregate Vana, that means, and in Volland, I don't want to talk about like the pricing, because then the pricing is different. But in Volland, because we're seeing the positioning of everybody, we can see how much customers are anticipating a strong move. If it's low, if aggregate Vana is low, that means customers are not anticipating a strong move, which ironically makes it more susceptible to a strong move. Okay. You know, I hear people ask me, do I believe in Max Payne? I thought that was a superhero at first. You know, that is what the biggest thing to me about Max Payne is whatever people least expect is what's going to happen. Like, it seems like, and, you know, 2008 was a big, you know, if you watch The Big Short, the whole first half of the movie is everybody saying that the mortgage market won't collapse. Like, it can't collapse. It can't collapse. It's a mortgage market. And the thing that people are least expecting is what's going to happen. And the thing about Volland is that it shows you what people expect more, you know, it shows you what people expect or not expect to happen. We just went up, you know, I guess we peaked at around 30% SPX for the year. People are not expecting any downside right now. I mean, if you could open up like all expiration Vana, Jay, and like scroll out. So all that negative Vana, right, is saying people not expecting that there are going to be problems, right? Those are sold puts. Those are sold calls in the money. Those are, you know, that's how people are hedging, is sold calls in the money. You're still losing, you know, like that is people saying they're not expecting big, strong moves to happen. Now, if you see pricing, if dealers are pricing strong moves happening, there's a disconnect, there's a dissonance. And that is really what Volland's all about, is finding disconnects between how customers are positioned, how dealers are going to hedge, and the results of it, okay? So if customers are not expecting volatility, dealers do have to hedge that volatility, and they're going to raise and lower prices to match that, to match that thesis, right? They are, you know, dealers are mechanical. They are not, they have no opinions. They're trying to reduce risk. But if they see too many people one-sided or the market mispriced even a little bit, they are going to hedge that, usually by demanding more edge, larger spreads, stuff like that. So that is what Vana represents. Vana represents skew, okay? And when you have Volland, which is not assumption laden, there's no jacks, you know, nothing, you know, this is, we take every single trade and we categorize it. This is real data, right? This is not, and that's why, you know, people ask me, why are you so much more expensive than this? Because we're real data. We're consuming all the data, and that it has costs to it. You want real data, you come to us, okay? So, you know, Vana represents skew. When you see that the market is pricing high skew, but you look in Volland and you see low skew, right? You see those low 450 million instead of 10 billion in Vana, you know that we can get very volatile. 3 instances this year, and this year being 2024. Oh, wait a minute. Sorry, you got to interrupt me. How much time do we have until Tokyo New Year's?
It is, I think, 10 seconds. 10,
9, 8, 7, 6, 5, 4, 3, 2, 1.
Happy New Year.
Woo! Way to go, man. Your New Year's. Tell us how 2025 is like. All right.
Love it, man. I love your love your enthusiasm for other cities and countries' New Year's. Like, I love it. I just love it.
We're last. We're last. We're last to deal with that. You know, in Hawaii, they already know if the world's going to end, right? All right. So anyway, going back, Vana is the measure of skew. So if there is low aggregate Vana, then that means that the market has the potential to be extraordinarily more volatile. Plus, it also means that the degradation of volatility is not going to push the markets up as much. Okay. And this is what I was warning. And, you know, there have been some, I've been warning about that for several months now, that aggregate Vana is very low, probably since like right before Trump became, was declared winner of the presidency. The aggregate Vana was really low. And yes, we pushed higher, kind of in a volatile way. We pushed higher, but that the danger was always there. And in August, September, and December, in 3 separate instances this year, we had major over VIX drops. And that's a lot for 1 year, is 3 times. I mean, since we, you know, when I did that over VIX, under VIX study, it was back to 2012. And, you know, from 2012 until now, it's only like, 17 instances with only 1 loss, but that's about that's like a little over once per year. But we had 3 this year, and not only this year, but 3 in the second half of this year. So I mean, Vana is very low, and that possibility of an over VIX drop, it has generally increased. And
Wait,
you know,
I'm going to pause you just really quickly. Again, I'm going to pause you, like breaking news here as we get Vol live updates, if you don't mind. So just a call out here for the group here. So if you notice, like 59.35 previously, right, and 25 were kind of sell zones. They're starting to neutralize 25 here intraday, just a heads up, right? So that last bounce from the 59.10, now you're starting to become neutral and even breaking. And I believe we just broke the 59.25 level. So now, like, clearly 30.35 is our next zone here. And then this is where the next major consolidation or implication to price action is going to come here. If they can flip this starts to get pretty bullish here. And maybe, you know, if you want to pause really quickly, Wiz, and just maybe talk a little bit about the left side to the right side of the tail and why we would consider this very bullish if this started, you know, once we broke above 59.35 here.
Yeah. Okay. Yeah.
I mean, looking at the charts just really quickly for everyone, just to kind of visualize it. So we're now about like 48 points difference. So bring this down a couple of here, but right now, like, that's the pivot here is 59.25 still, right? It's showcasing that we can go up, but until I see that break, right, I'm waiting for that. But that's what you're kind of seeing here in Volland is. This is a big break here, though. Like, this steep of a curve here, like, don't just immediately assume and jump in that this is going to occur, right? This is a very large steep here, but I am suggesting, like, yeah, you have maybe a 5-10 point push, but is that worth your R&R? Is that the type of R&R you're seeking? And it's not, right? And this is where I wanted to kind of highlight here for everyone. Like, yeah, we saw a little bit more runway, but am I wanting to take, you know, 10 to 15 more feet of runway? No, like I want to see the full runway to land my big plane, right? So that's not what I'm seeing. So, like, to me, this is still not a long. If anything, I would still be shorting 59.25 if we got in here. And if I look at it, we just sold from that level, right? So still resistance.
Right. And now I'll explain now why Vana, like why these levels of Vana are important, as opposed to, you know, what I explained just now was more about aggregate Vana. Now these levels, okay, so I guess that would be closer to a J question. I mean, I could try to answer that one from my standpoint, but
yeah, I try to type it in the chat. Let me kind of just quickly explain it here. So, I mean, to me, like, if I'm not in a trade, just like right now, I'm not actively trading as I'm trying to do this analysis and review with all of you here. Like, I'm waiting for a reaction somewhere in this like 10-point zone right here, right? So I'm waiting to see how price reacts somewhere here. Now I'm looking at it both intraday, I'm looking at it at the weekly, I'm looking at the next 0 to 30 days, and heck, I'm even looking at the all expiration if there's something story-wise here that's telling me different, right? So if now let's say my thesis that I've now built is to short, right? So I'm going to look somewhere between 25 to 35 here. Ideally, I hit this 30 and I can short at the 30 level, like great, right? But there's some risk management you have to take here and believing your thesis and your plan, right? So that's one. Now let's say it's the short, and that's the direction we're going into. So if you look at the intraday and even the weekly, you have all this positive Vana here. So again, that positive Vana below spot, right? What do you need to see? You need to see that VIX increase. So you see the VIX increase. Now where I'm going to start to look at is, to your point, intraday, even though these are like $200 million strike levels, they're still relatively large, especially on a lower volume, illiquid days, sometimes like the holidays are, right? So this level will matter, and it has mattered so far. What, 2 or 3 times we've tested it, right? At some point, I think it's going to give. At least that's my personal opinion, because I don't see it being such a critical level here, if it wasn't, or if it was on the all expiration. So here I'll compare 59.10 or 59.15. Where's the sweet spot? Well, here you look at 59.10 on the all expiration, it's larger, right? So I'm going to give more positioning to that level. So that's the first area. That breaks down. Like, we're not going to stop here at 05. We're going to now chase 59. And I look at here, okay, 5,900. And look at, it's a negative Vana on the all expiration. So to me now, like, I'm super, like, if I had a short, I took it from 25, we get to 5,900. Be happy, guys. Don't be greedy. Sell that trade and then reassess, right? Because especially when we're a high volatility market, like, you could have called yesterday's short even at the market open, and had you stuck it out thinking, hey, I'm definitely going to get to 58.50, that sucked, because you dealt with the reversal and all your profits are gone. So lock those profits in. That's why I roll, especially when I'm doing intraday trading. I go from target to target to target, and I will sell contracts. I'll enter contracts. And to your point earlier, it is why I do ES and futures contracts, because it's cash settled, right? So I can enter and I can exit. I can enter and I can exit. My only recourse, paying the commission fees and my risk management.
Yeah. So to answer that question from a more
and just to show
general
power,
theoretical standpoint,
we're selling. We now made a new low of the session, new lower of the session. So again, guys, like, I don't want to, I'm not like just a homer here for vol, and it literally changed my trading. Like, I was getting frustrated before I found vol, and I was like, between volume profile, GEX, and all these other things, I'm like, nothing made sense to me. And it was like, finally, it made sense. I did my due diligence. I back tested it. I learned, I researched, and I built conviction. Once you have that conviction, it's still managing with some risk management, but the data is there. The numbers don't lie. That's what I always say. A picture can lie, but the numbers won't lie within the picture.
That's a good point. So I want to answer that question from a more, I guess you could say, a more theoretical standpoint. And that's usually where I reside, because I want to, my theory kind of thing informs my trading, right? So SPX Vana averages around 10 to 15 billion, okay? Give or take, right? On like a normal kind of standpoint. If and as you had said, so what Vana, the kind of mathematical definition of Vana is, there's twofold. It's a cross derivative between delta and implied volatility. So for every move in implied volatility, the delta changes, right? Which makes sense, because if if you have a 30 delta put or something, a negative 30 delta put, and implied volatility gets smaller, and we had a 30% chance of reaching that put, that chance will decline, right? That'll be 25%, even if the price doesn't move. So it's the change in delta based on implied volatility changes. It's also the change in vega for the underlying movement. And right now we're going to focus on that first definition, which is changes in delta, because that's how dealers hedge, is in delta, right? So as implied volatility is changing, right, the deltas in kind of like that 15 to 25 range are going to change more than like that 50 delta. In fact, that 50 delta, if the price is there and implied volatility changes, but there's no movement in price, you still pretty much have a 50-50 shot of going above or below that price, right? Because of that, Vana at the money is 0. It's the opposite of gamma. Gamma is the largest at the strike, but Vana at the money is 0. It is the largest in that 15 to 25 delta range, right? Okay, so now that we've established that it's kind of like a sine curve, right? Why does Vana flip when price goes over? Okay, if let's say you're long a put, okay, you're long a 30 delta put, and Vana for that is positive because that the true delta is negative 0.3, right? And if implied volatility comes down, then that negative 0.3 becomes negative 0.25. From a numerical standpoint, that is an increase, right? So because that's an increase, that is, that's negative Vana, because implied volatility comes down, it's an increase in value. Long put, right? Not short put. So that long put, I'm taking it back because I'm sitting there thinking, I'm looking at bringing Jay's thing, and it's not a long put, that's a short put for dealers, right? So a long put is negative Vana because as implied volatility comes down, the numerical value of that put goes up, right? Now let's say price goes down, that put becomes 70 delta, negative 70 delta. Implied volatility comes down, but if that put were to exercise, that would be -1, not 0 delta. Okay. So it would go from negative 0.7 to negative 0.75, not up, down. So implied volatility coming down, actual deltas also going down. That's a positive correlation. That means positive Vana if that put is in the money. Okay. The same thing is true with calls. Okay. If you have a 30 delta call, that will, and implied volatility comes down, that long 30 delta call comes down at 0.25. So the call that's out of the money, the long call that's out of the money, is positive Vana. Okay. So you can't determine whether something is a call or a put using Vana. All you could tell is, are you long or short above or below price? Okay. And it doesn't matter whether it's a call or a put. But it does matter if it's a call or a put when you're doing your trade planning for gamma. We'll put that aside. We'll table that for a little bit. But from a Vana standpoint, all that matters is, are you long or short the option, and is it above or below price? Okay. All right. So we talked about, okay. So then now to answer your question about when do I determine whether Vana is a magnet or not? It depends on how much aggregate Vana we currently have. So if there's a big positive strike above the money and we're at like 40 billion Vana, like we were in March, right? 40 billion aggregate Vana. That large positive Vana is probably not going to be a magnet. Maybe it might, but it'll probably pass, because let's say that large strike is 5 billion. You just went from 40 billion Vana to 35 billion Vana, which is still well above average and still very strong for volatility to, volatility still has the same impact, just a little bit less, right? You might get a hiccup at that positive Vana, but you might stop for a little while, but you're going to continue probably, right? You're going to continue to go up. that is kind of the concept that I use when I look at that. Back in like October, November, when everybody was yelling at me how wrong I was, we were sitting there declining in aggregate Vana over and over and over again. Part of that was election event vol. Election event vol was elevated. This was prior to the election. Election event vol was very elevated, and they kept it the same price no matter what. So we ended up passing Vana strikes like they were nothing because the volatility wasn't actually changing, right? But it created the situation we're in now, where aggregate Vana is extremely low, and now we're going to swing quickly. I mean, realized vol is going to probably exceed implied vol. So if you are a option trader, this is a time where you want to be long gamma. You don't want to be short gamma right now. Don't be selling condors, or don't be doing that. No butterflies unless it's way out of the money. Calendars are good. Long options are good. Straddles are good. What went wrong with you, man? There you go. Oh, I think so we were deploying some fixes on the 3D chart. That's probably what happened there. Anyway, okay, so that's how we determine, personally, anyway, that's how I determine whether it's going to be a strong resistance or a weak resistance. It's not just the static level, but it's the static level and how strong is aggregate Vana already. All right, so now that we did a little Vana soliloquy, tell me, Jay, what we're looking at for intraday.
Yeah, so thank you for that. I think hopefully that was helpful for everyone. Having that explanation is always in the back of my mind of how all of the Vanas work and the deltas and the mixtures of them. So intraday, so our Vana exposure flip, we're green on both sides of the tail, let's just say, right? So here, as I kind of put in the chat room as we were entering 5,900, I think what was our low there for just a minute? We hit a low of 59.06. I kind of initiated to everyone, hey, if you're short, probably want to start taking some profit, especially from an intraday standpoint. So, we kind of have this view here. I would say we're still very much in chop world. If you look at from an intraday standpoint, there's not a lot of push up. 59.25 is still resistance here, right?
Right.
And you can even see here, although you're green again, this is for an intraday move right now from a volume standpoint. This is a massive move to make here. So that's how I'm looking at that. The other thing is let's start to look at our Vana strikes. We haven't fixated on that as much as the exposure charts we have here. You'll now start to notice negative Vana now at 59.20, even starting to build here at 59.15. So this is starting to build as resistance, right? Whereas previously it was 25, right? Now we're starting to get some levels below that 25 building up as resistance. So the one call out here, as powerful as this is, especially to exit entries, right? Sometimes entering I'm not taking this long just because I see this, right? I'm conflicted with my data. And I think this is a good example here. If I look at this, I should go long here, right? Especially if 59.05 holds. And yeah, if you were quick and fast to trigger your trade, yeah, 1000% you should. Because, if anything, we're going back to 59.20 and we did do that, right? We hit 59.05 basically, and we went right back to 59.20. But are we going above that now? That's where I'm not gonna I don't want to find out unless the data now changes for me. And to me, it's not, right? It's not telling me that we've got a lot to go up beyond 25. So I don't want to be entering long still here at the highs of the day or the session, if you want to call it that. If anything, I'm still looking for shorts. Now we are an hour, typically there's a little bit more volume this time of the day. We're very little on volume, knowing that it's, New Year's Eve here. But yesterday, if you would have seen this, you'd have seen a bunch of volume go back and forth. That bounce, someone's asking, here's the bounce. This is why I initiated that. To even get to that 5 points from 59.05 to 5,900, this is a lot of selling intraday that has to occur. right? And knowing what I just said about the volume and how little of it that we have here, I'm not going to wait and find out to see if we're making that bounce. And that's why I sent in the chat room. You should start exiting your shorts if you were in a short, right? Because if you're not going to exit this, you're going to miss your opportunity. And if you missed it, like, you're now dealing with it, right? Now you're dealing with your short that was 20 points in the money. Now it's essentially at zero, right?
Yeah.
So this is also why, in a high volatility, just to keep it simple, anytime the VIX for me is above 14, I am locking in, especially intraday trades, 10 to 15 point moves. Like, that's my goal. If I can get 10 to 15 point moves, do maybe 2 trades a day at max where I capture that 20-ish points, I'm happy, Wiz. Like, that keeps, like, I'm not trying to Lambo get rich here. Like, I'm just extra income, discretionary income for me. That's what my goal is here. I don't want the stress of trading to be my full-time job. I like building what I do for full-time. So, for me, this is I used Volland. I have my trading strategy. I'm not here to go for the riches, right? And for me, 10 to 15 points a day, that's the minimum I'm after. And that's my goal. Set a goal. You just, after 5 points, set that as your goal. You're after 10 points, set that as a goal. So that's a little bit of my background. And sorry, I had to go a little bit on a tangent there, but I saw a couple of questions I wanted to answer.
Yeah, no, it's fine. I think that, somebody, I guess you said, somebody asked why 5905 was a bounce area. And, we showed the positive Vana there. Right now, dealers try to, intraday dealers are trying to defend, that positive Vana below price means they are short options down there, probably puts, right? Somebody bought puts at 5905. They're short there. The way dealers are hedging implied volatility is very little. Like, they don't hedge because they want to try to collect that premium, right? They're and so they're trying to collect premium, and that's in that implied volatility range, right? They will, I don't want to say they defend, but they do. There is buying at those downside levels of positive Vana, unless they see, because they see the trade flows before we do. Unless they see large flows coming in, then they're going to gamma hedge and they're going to allow it to go down. It bounced on 5905 probably because there's low volume, and it's probably a thin book too. I don't know, Jay, if you see that kind of stuff. I know Hunter, when we had a prior live stream, that's what he looks at. It's like, is the book thin? Is it thick? He uses what's that, book map or something?
Yeah, I mean, just call out for those who don't have, like, order flow and using some of those tools. Like, for me, I use the volume profile just to call that out, right? So you can go into a 30-minute chart, see your volume profile, your high volume nodes, your low volume nodes. That's another way you can look at it. It's not as strong as what Hunter does, obviously, from that standpoint. But yes, I do use some of those techniques as well.
So that's a 30-minute. This is a 30-minute candlesticks, right?
Correct. Yeah.
You're looking at here. Look at that range in 30 minutes. You're looking at 30 points in 30 minutes. That's 2 straight candles. I'm telling you, like, when you have that low aggregate Vana area, that's what you're looking at. You're looking at big swings. You're not looking at, necessarily a strong move in one direction, although that can happen. But you're looking at big swings, thin book, be nimble, that kind of thing. That's what you're looking at, right? Between the 10 o'clock to 10:30 is usually when I give my first 0 DTE update. Should I do like a 0 DTE?
Yeah, you should. You want to? I'd love to walk everyone through it, what you're thinking and
what I'm looking at. Okay.
Yeah.
All right.
So the whole point of today, right, is to get a little bit of insight into our brains of how we use the platform.
Yeah. All right. So I have All right, hold on. Okay. So on my should I share my screen?
Yeah.
I guess I should share my screen. Hold on. Because you'll end up seeing what my widgets look like. All right. Okay, is my screen showing? Yes, it is. All right. So all right. So here I am. I'm doing my 0DTE update. Okay. To be honest, many times I didn't even look at the market yet. Or like I looked at the market like when it opened or like right before open to kind of see, all right, what should I expect? But around 10 o'clock, I haven't looked between like 9:30 and 10 o'clock. There's a lot of administration and stuff that goes with this job. So so at around 10 o'clock, I open this up. Plus a lot of happens between 9:30 and 10. If I'm giving my 0DTE update at 10, then a lot of that time, that half hour is a little bit superfluous. So, all right. I'm looking, first of all, it's pretty strong, negative charm. I'm looking at charm. I know Jay looks at Vana. I guess it's just the way I kind of evolved in my Volland journey. I look at charm for 0DTE. We see it's negative above and negative below, and that kind of shows up for ejects pure. We do see a little bit of green up here. So that means that there are people buying calls, I guess. And that's why instead of guessing, I just separate between calls and puts here. It looks like there's some in the money puts. Somebody bought puts at 59.50 probably yesterday. And it looks like people have bought. So this is like a synthetic short right here at 59.50. So these are the puts, these are the calls. And the calls seem to be, the puts are at 789. This is at 1.3. So this is a big strike right here at 59.50. That is called, so this is a short put and a long call for dealers, right? That's the dealers. They have something called a synthetic long at the same strike. That means that with a synthetic long, as the primary position, that it's going to increase volatility because they're going to have to hedge delta kind of in real time, right? They're going to have to, it's almost like a company matching product when you have like a synthetic long like that. For every one contract bought in ES, then the dealers are going to have to buy, 10% of that or something like that, right? On the aggregate though, right now it is negative, but it'll probably just swing, it'll swing back and forth. With all of this looks like there's put support here, particularly at 5,900. That's the equivalent of the positive Vana strikes, the 5,905, I guess, 5,905 to 5,900, this area. That's going to be support. And, in that power hour time frame, that 2 o'clock. So I see a bit of put support. I see quite a bit of, technically net short calls. So I like this Jex Pure. I like the target 59.50, but it does have to, it's going to need to pass through these positive charm areas. That 59.35 here is going to be pretty strong. So I honestly think we're going to stair step up a little bit. I know you were saying you were expecting 59.05 to break. I think as time declines toward the end of the day, if we are staying in this area, between 59.05 to 59.25, we'll probably get an end of day run to the upside. And as these break, that run will increase. So I think that 59.50 could be close to a top, the target 59.52. The notionals are still kind of low-ish. I mean, well, not that low, but they're low-ish. Yeah. I do think that So I
Well,
would be
if you
saying
look
that.
at your Vana as well, Wiz, while you're just doing
Mhm.
this to quickly interrupt you, like and I don't think 5905 breaks, by the way, 5900. I think that is firmly a support today, especially looking at the Vana exposure. But what you'll start to notice here in the latest update is you're starting to get some green now above spot, right, in the Vana exposure. So complete your analysis here, but it's the Vana now, just for everyone who's viewing it, especially looking at that exposure, it's starting to align with this thesis here. So I wanted to just call that out.
Yeah. So at this point, I'm looking at the charm, the intraday charm. It would be flipped for Vana. Basically, it'd be the opposite, but it'd be the same kind of scope. I think that we can get up here to the 5950 area and possibly get up to 5960. So I would be leaning bullish. There will be some dips. I see we just dipped a little bit to 5921. But my overall thesis would be if 5935 breaks convincingly to the point where we can get to 5950, if we get a strong move past 5935, then 5950 to 5960 is in the cards. So what I would be looking for is, number one, buying the dips for today, and number two, looking for a strong break of 5935 that it may get up to 5950, 5960 area. I would not be shorting today. So far, I mean, again, things are fluid, but right now, today at 10:30, I would not be shorting. I would be going long, and my initial target would be 59.35. If you are a futures trader and you have a full position, maybe take off half of your position at 59.35 and leave a runner with a trailing stop. There's your trade plan. The only question I would have is an entry time. And it looks like market forces can get you down here to the 5,900 area, 5,905. Remember, it is very volatile because of the low aggregate Vana. So see if you can get a good entry here at 59.10, 59, this area, and hold it till 59.35, cut off half, put a trailing stop on, and cheerlead up to 59.50 to 59.60. Right? Should I type that out? I guess there's a bunch of people not watching, a bunch of people at work. I'll type that out while you tell me I'm wrong.
Yeah, no. If you don't mind, Jill, you can maybe go back to my screen here. We can kind of just showcase a little bit of that. So again, from a Vana, if you're looking at this Vana versus charm, again, there's two ways, and I've got both widgets here. I'm looking at both of them, right? So you can look at that. 59.10 now is even supportive here, 5,900. But then if you even look at here, like going back to this, like this 5905 to 5900, like look at the steepness of this curve here, right? Like this takes a lot to break here. So that's, at least, if I was trading out, if I use that 5905, and that's why I message when I message in the chat room, lock in your puts if you're going there. Now, here's one thing. You're starting to get into, an hour away from London's close, right? And things of that nature. So on a lower volume day like today, like these moves become harder to follow. I'll just call it that. Like if you don't have liquidity, things are just going to kind of bounce around within this zone. So still to me here, like between 25-30, I'll use this zone. You're still potentially looking at like finding shorts. It's still very much a buy the dip, but again, just intraday, if you're scalping mindset, right? Like you shorted 25. I think Johan's even asked in the chat here a little bit ago, would I short this? Like, yeah, I would short it out, maybe keep a little bit tighter risk, knowing that, hey, I already went through the morning. I collected maybe 20 points, 15 points in profit, right? So I don't want to give that back to the dealers, right? Why give back the money I'm making? So maybe your risk is tighter, whatever it is. But, if I look at just pulling the charts here, again, like same story, right? You hit, near, not 25 this time, you hit 20. And if I go back, I think 20 in the last update was actually a negative Vana in here. So that held as resistance. But again, just like anyone who goes through order flows or book map, right? Like you got to suck some sell orders or buy orders in, like you're going to see that naturally here, and your Vana's flipping from red to green, right? So again, I'm not going in large in size and saying we're going to even break 59.10. I think we hit literally 59.10 here, and we're now holding that, right? So like we're in a very tight range, and that's why I was, as I said earlier when we hopped on here, when I see an exposure chart like this, again, just without the formalities of everything you explained earlier, Wiz, like this to me is just chop. It means it's not stuck in a 5 or 10 point range. It just means there's volatility high, yes, check mark. I got this, not so clean curve to the tail on one side or the other side, right? So to me, the big thing there, we got an update here. So the big thing for me here is to capture essentially, is it flattening? Is it starting to kind of curve out right? Then I'm going to have a move. Otherwise, if I don't see that, I don't want to be going in and staying in positions for too much time right now. We'll come back as they're kind of uploading. Go ahead, Wiz.
Yeah, really quick. It seems like we got, as I was giving my update, we got like a big seller, but it only got down to like 59.10 or so, right? And then we're bouncing. Like that's what I was saying. We're gonna, any sale, I would be buying that dip, right? Right? Does that seem reasonable?
I think so. I mean, and until someone can break 5,900 and hold it again, like I don't want to see a quick drop below 59 and then it gets sucked back in. Like that's not breaking that, right? So like if I'm like today, I think in general so far what I'm seeing is I'm scalping in any direction, up or down. There's no direction that's being determined here. So that's first and foremost. You start to set kind of what I will call like these control bars, right? High, lows here. And you see we're just been trading within this tight range. So use that as your thesis. And then where are the Vanas that lay there? And we have the same Vanas, right? So like I'm not getting bearish or let's say adding a swing bearish trade because I've seen nothing that tells me to do that on top of that, right? So to me, it's, again, you got to look at the data, right? You got to set a thesis based on that data, and then you got to execute based on that thesis. And right now, what this is still telling me, if I just purely look at this from the Vana exposure and the Vana strikes, right, is like I'm shorting 59.20 at this point, right? If it comes up here, and I'm gonna take it to that 59.10. And hey, if that 10 breaks, maybe we get to the 05 area again, but nothing's changed since, if I go back to this historically, we have not changed much here today, Wiz. Like you're just in this 25-point range or 20-point range, in my opinion.
Yeah. Yeah, I agree. Right now it'll be a strong 20, 30-point range, but it'll be whipsawing. I think you'll get opportunities. And like I said, personally, I would not short. I would, because I think that the chance, I guess TA people call this flagging or something. I think that the chance of breaking out, what is there a greater chance of breaking out to the upside or downside? Higher chance of breaking out to the upside rather than the downside. That does not mean, by the way, that 5,900 is guaranteed to hold. You definitely still have to have risk management. Do not full port. And if you see a 59.08 and you're like, oh, full port, that's it. Mortgage my house. 5,900 is a strong support. It has proven to be a strong support. Doesn't mean it's going to be support forever. So, just one Donald Trump's read, you walk the house, right?
Well, I think also to keep in mind in there, like we've just only honed in on like SPX and ES today, Wiz. But you got to look at the other indices, right? Like QQQ. If my, let's say, mindset or thesis was I'm going to short SPX and it's whatever reason, right? One of the first like concepts I'll always look at is like, what is QQQ doing? Because if there's no weakness in QQQ, there won't be weakness in the SPX. Like, yes, sure, not 100% there, but you get what I'm saying, right? So right now you look at even the QQQ, and let's maybe hop over here. I can jump into QQQ as well. Like even just from a 0 DT, your line in the sand is 515, 520 target, right? You look at the chart of QQQ, we've respected that 515 level, right? So like, unless QQQ is below that 515, I shouldn't be too extremely bearish on SPX. Can I scalp SPX? Of course, I could potentially scalp SPX. But if we kind of come in here and let me change this to my 0 DTE here. Boom, save that and update this one as well. I usually leave this for Captain to do the QQQ, so apologies that my charts are not as updated here, but all right. So you can clearly even see here on QQQ, right? Like holding 515, resistance 517, right? And I go to multiple time frames, tells me the same story. I look at the Vana exposure chart, like this thing is a little bit more bullish, obviously, but again, like it's a steep curve here going from here to here, right? Like I'd love to see this a little bit more flattened to see that push, but I can't like get too bearish seeing that the Van exposure is so green and positive in my opinion. Where's any
a lot of the paradigm thing that we say, which is why I focused on charm, but a lot of the paradigm stuff is based on time. It's not so much based on like Vana right now. If looking at that aggregate Vana curve, you're saying, well, they're going to buy, right? It's going to go up. There's a lot of support, not a lot of resistance above, but as implied volatility comes down. But with charm, they will have some flipping, and and as the day goes on, Vana shrinks while charm increases. So that's kind of why I look at charm mostly on 0 DTE. But all right, we have like a half hour left in this. Half hour left, I guess, of this live stream. I do want to get to people's questions because I do see like there's maybe 800 million comments, and I have not. I mean, I'm sure that a lot of it is conversational, and initially when we did this and cobbled it together, I was thinking, we would accept a lot of questions and a lot of comments, and I'll just, I could even just respond to people saying good morning or whatever. I just see Adam Martin got the first comment in and said good morning. Good morning. And we have some people from Germany. That's one thing that I like about our Volland. A lot of our Volland subs are truly like high-end retail people. They understand, like even you, Jay, and that's the first time anybody's called you high-end. But I
appreciate it.
But these are people who treat trading like a business and know that they need the right data in order to make their make the thesis known. So
I want to.
We are going to record this. This is a lot of information. And I know when I went on my little Vana soliloquy, a lot of that is in our prior videos. We are going to be making like a learning management system. Just
to call that out, like I love the Discord community. We have so many traders from across the world, and we just even had someone just comment right now I see in the chat from Saudi Arabia even, right? So we have a lot of viewers from different parts of the country with a lot of different experiences, even in their, call it daytime job worlds, right? Who can bring either economic information or analysis or insights, right? Again, I'm not going to maybe take some of the commentary in the Discord and full port into it, but it is good to get refreshing, intelligent, good conversations. I've been to other communities. This is the one thing I'll say about Volland is it does really well there. You got a great community of traders, people who know their stuff really well. If you think I'm any good, I would just tell you that there's probably even better traders than me in Volland. So, it's an awesome community for those of you who are not in there actively right now.
Yeah, the not just that, but it's between Jill and I, who we, Jill, I guess, would be the first moderator. Jill, my wife, who's in the background actually even of this live stream, we try to make a community of collaboration. We've had several. We're not quick to kick people out. I think it was only like 3 or 4 people that are banned, but it's not Wall Street bets. This isn't full ports and diamond hands, and we do have our own terminology, but it's it's usually more Volland related. Like it's and there is some that are not Volland related. That's it's kind of funny, but we have like Ken out there, Ken Griffin, who's manipulating markets, and we kind of laugh about that. But anyway, yeah, I see a bunch of comments about the kids, Catherine, who snuck up here, and we had to send Jill, I guess, had to send my older boys to come get Catherine and corral her downstairs. Yeah, they're fun. They're good kids. I'm not teaching them how to trade yet, although Gregory keeps trying to trade his Pokemon cards. So
hey,
he actually tried to trade his Pokemon cards on the CBOE floor. So they started talking about Pokemon cards.
Hey man, good for him. He's already investing in trying to make himself better in life. Love it. Love it. Love it.
Jason asked if we have plans to try to integrate with TradingView. We tried. TradingView is not very friendly to outside data. And it's one of those things. I know that some of our, some like JEX services and stuff like that have TradingView. And that's because you don't need data in order to make a JEX, right? You only need calculations of readily available data. So they just put in calculations. And we, what we would need to do in order to do TradingView is import something. And they don't like that, that people at TradingView don't. If you want to yell at them, you can, because we're very willing to put something into TradingView. But, that's kind of where that's at. So, I mean, we haven't really done much there. We could talk, I guess, before we leave. We've got 13 minutes until Chinese New Year. So a Chinese Gregorian calendar New Year, not Chinese New Year. But anyway, so yeah, we're getting our last champagne drinks, right?
That's right.
Anyway, so that's where we're at with TradingView. So we're sorry we can't integrate with TradingView right now. That's where we're at. So if you plot a line every 5 points on a chart, of course, it'll touch it and react at some point in time. That's true. However, that's why I asked Jay, like, how did he choose to plot his points? And, if you look at Jay's TradingView, you do see like medium, high, I think he kind of specifies the strength of each point.
Yeah, I mean, for me, like, it's some of these, like, especially those smaller Vanas, like, they're just areas of interest. Like, I want to be aware of them. I'm very much of a visual person. Just again, how you trade and how you do your tools and platforms, like that's a you kind of thing, right? And for me, I'm a very visual centric person, right? And while yes, I have my chart here and I have my Volland on another screen, to me, when I'm just like focused, I'm in a trade and I'm actually trading, right? Like, I don't want to have to be jumping all around. So for me, I like to put those indicators. You didn't notice, it's hard to see on the screen, right? But there's different weights that I gave each of those Vanas, right? Again, I'm not expecting every 5 points something is going to happen, or that's the levels, right? And you can clearly go in my trade plans. You're not going to get a 5-point trade plan idea that I've ever given, right? Right. So it is just areas of interest I want to be aware of. If it's positive at a 5-point level or it's negative at a 10-point level, those are critical things that are important to me. And, hey, I've got the receipts. That's the one great thing I'll call out, Wiz, here with doing these trade plans is everything's documented and on paper, right? So, for me, it's go back, read it. Like, this is powerful stuff. And, I shared these trade plans now for like, how long has it been? I think a year plus, 2 years almost now since I've met you, Wiz, but it's there, folks. Like, call it for what it is, but I'll stick to my successes and my joys. And I know a lot of people have reached out to me who use the trade plan and have had a lot of success as well. So I'll leave that at that.
Good. Yeah. What's my option on zero DTE sizing? I guess the word was supposed to be opinion. So I guess Jay, you could talk about that because I personally use if I do anything zero DTE, which I'm not today. Obviously, I'm sitting here with you. I do with options, and I for a short gamma play, maybe I'll just do one spread. But I won't. I'll do maybe 1% of my portfolio at most on a short gamma play. 25 bips on a long gamma play, maybe even less, because those are going to have less chance of success. And I have to exit, right? Like I have to exit if I'm doing a long gamma play too. So, 0.25%, point even really if I'm to recommend anything like 0.15% of your portfolio on a long gamma play, because when you make a profit, it'll end up being like 1% of your portfolio, right? So that's kind of the level that I would be looking at. But for futures, you can comment, Jay.
Yeah, I mean, I think even myself, like I think a lot of it is just it's a personal question, meaning you have to understand what your risk is, right? Like one thing I do like, especially even though I'm doing futures, I still trade options because I know if I put let's say $1,000 in premium in an option, I'm losing just $1,000, right? If anything, that's my max loss, right? Now, if you're leveraged and you're shorting or longing and you're on the wrong side of it, like you have an evening like August 5th where Japan sold off the markets, right? Like that sucks, especially if you don't, manage really good risk management, tight stop losses, whatever the case might be, right? So like to me, the first big thing is like just to call out, like I'll use, typically my sizes are 2 to 4 options is what I'm going to be trading, right? If I feel stronger about a trade, like today, I would have never traded 4 options. I'd have only traded my typical 2 is what I would have done today. In a high volatility market, you kind of need to do that. So sometimes you don't get faked out, right? Your premiums don't burn in one direction or the other. And then I think the other call out I'd make here was like, I honestly, unless it's like after 2 p.m. and going into like the end of the day and I want to take a lotto and see if that lotto goes from 40 cents to $9 or whatever, right? Unless I'm taking a shot like that, like I personally don't like trading actual zero DT expiries, right? Even though I have an intraday mindset, I will a lot of times buy at least 1 DTEs, if not like the weekly expiration. And I do that so that I don't have as much decay. Decay with zero DTE, and there's been a lot of studies, you can YouTube it and so forth. There's a lot more decay. So even a 2 to 3 point move, if it goes in the wrong way, that's why you get faked out. The emotions get kicked in. Although you had your thesis, your plan, you had the data, is mentally the game is now over it's trumping what the data and the trade plan you had, right? Because you're like, holy cow, I'm now down 500, 1,000, whatever dollar amount you're down, right? That's all you can think of. So to me, what's more important there is I like to buy time, even though I am, maybe doing an intraday trade, because the emotions are not going to be baked in as much, and I can focus on the data then and let the trade execute.
Yeah, CBOE had a study. It's on their site. I don't have it handy right in front of me. Zero DTE decay usually isn't too bad until 2 o'clock. Then it is ripping, right? And you're getting crushed. If you're going long gamma, avoid 2 p.m. to about 3:30. And why that last half hour? Because by then, almost all the decay is gone. And, you could probably buy an option 5 points out of the money for very little. And you can get that like accelerated, massive gamma spike. Yesterday I was looking at, okay, sorry, fine. I did put on a trade yesterday. I had like a butterfly, and it was like 59.20. I had a long put as one of my long strikes. I ended up closing it out only, with like 100%. But, you get that ripper, I could have made, an insane amount of money, almost 10x by if I would have kept it. And I usually don't keep it that long. But, when you do like long gamma, avoid 2 o'clock to 3:30. After 3:30, the realized volatility is actually higher than the implied. So 2 o'clock to 3:30 p.m. Eastern Standard Time, that's when you avoid the avoid long gamma, right? Get out of it if it's 2 o'clock. If you're at a loss, boo-hoo, sorry. If you that's the only, and in fact, if you want, go long gamma in that time. That's when you'll realize most of your gains, and then get out at 3:30, because that probably is really a good advice. Like between 9:30 and 2 o'clock Eastern Standard Time, trade how you will. Try to follow the plans if you're trading options. Then 2 o'clock to 3:30, only long gamma or only short gamma. If you don't have a short gamma plan, get out. Don't worry about it. 3:30 to close, long gamma only, right? Get out of your short gammas, long gamma only. So I just made that up now, but I will write that down because it's good.
I think that's, so the other thing, again, for those, you can go to my X as well. I'm happy to guide you there if you're not in our Discord. Like I have a set of trading rules, Wiz, as you know, right? And one of those is sometimes it's, especially during break here when I've had more time to maybe trade, I more times than not like to avoid after London's close, right? I don't want to be trading, which is essentially around our, Eastern folks, Eastern Standard Time. That's our lunch hours, right? Like around 11:30, post 11:30 till about 2 p.m. at least. Like, unless there's a trend day going, we've had, or an FOMC kind of thing or whatever, unless there's a catalyst, like those lunch hours, especially if you're an options trader, it's the worst hours to be trading. You're just giving premium most times than not, right? Your emotions are going to kick in. You're going to, enter, exit at times you shouldn't. So that is why at a minimum, like I try to just avoid trading there. I go silent. Yesterday I went silent around that time, right? It's just a lot of noise and just not a lot of movement, right? And again, unless it's a trendy day or something's trending and there's a catalyst, maybe a little bit different. But for me, like I was looking at some of my trades over the past few years, right? Those are like probably the times I've given up, some profits back, or the most profits back, I would say, than if I would have just stuck to either the morning trade or wait at, post 2 p.m. Those are your higher chances of succeeding. There's more liquidity in the markets, more volume around those times. So I think that's just another call out, is a lot of times people will get stuck in over trading. Like you had a great morning. If you had a great morning shorting today, 59.25, you took it to 59.10 or whatever, don't overtrade. Let's just keep going, right? Let's stop, right? Like there's no reason to try to now find another 5 or 10 points when you just captured 20 points in a day. Lock that in, wire those funds out to yourself, whatever the heck you need to do, or you do with your profits. But I think that's another thing, Wiz, I'll just call out for intraday traders. Like just try not to overtrade too, especially in lunch hours.
Yeah. Good point. And but you don't want to, I think somebody on Twitter this morning asked me, why aren't you full porting these things? I'm like, full porting? Like, what are you, like, what kind of risk management is that? Think about this, right? If you full port every single one of your theses, it will only take one time you're wrong. You could have 100% gains 20 straight times, right? 20 straight victories, and all it takes is one defeat, right? Okay. Now, hold on. I want to interrupt myself a little bit. We've got now till Beijing New Year. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Happy New Year, China. Woo!
Happy
Gregorian
New
calendar New Year.
Year's.
Woo!
Beautiful. Love this. I might need to implement this with my family now. I love how you're like Carmen Sandiego, you know?
Right? But then what's great is that you're so tired of saying Happy New Year that you end up going to bed at a reasonable time.
Hey, well, I guess you can't make any bad decisions in your own time zone when New Year's comes. So there's that.
They say nothing ever good happens after midnight. Well, now there's no danger.
That's right. That's right. Do we have any other questions before we go off on a super tangent?
But let's I mean, we got 15 minutes. I've been doing pretty bad at keeping up with the questions, so I guess we can go.
Let me catch up here.
Why do you look at individual strikes alongside the aggregate? Does it not tell you the exact same thing? So yes and no. Like if you're just looking at the strikes, yes, but you want to know how much aggregate Vana or whatever that you have, so that you excuse me, so that you know how strong those strikes will be, right? So
yeah,
that's
like I mean here
you kind of talked about
screen.
that already. So.
Yeah, I mean really quickly, it's on my screen. Like here, like how do I know 5905 for 5900? Well, I want to come in here and I start to look around 5900. That's the higher Vana level, right? Mm-hmm. So that's where I'm going to pay a little bit more attention to. Anyway, continue.
All right, this is how it works, says Jesus. No, it's Jason and Jay. We appreciate, the compliment, but we are definitely not there.
No, I will never proclaim to be Jesus. I'm not a prophet, nor would I want to be.
Jason, not Jesus, Jason.
Yes.
How do you use Vana when we have VIX up, spot up? That's a great question. So VIX up, vol up, spot up, and vol down, spot down happens when you're at low, when you have low Vana or, lowering Vana and you're crossing a very strong positive strike. That's when that happens. And it's the reason why it's typically a top is because once you cross those big positive Vana strikes with low aggregate Vana, you're going to have a strong gamma release. Any kind of selling pressure will create a strong gamma downside. So that is why. So it's not using Vana when you have VIX up, spot up. Vana is the cause of VIX up, spot up. Okay. Jay, do you have any comment on that?
No, you nailed it. Keep going.
How do you use the data where you see when you expect a bounce? You saw the 59.25 entry. So how are you deciding how much you can get out of your trade? We discussed that already, right?
Yeah, we talked about this one.
Yeah, VIX higher, SPX filled the gap. One of Wiz's kids is playing Fortnite. Now, the one time they played Fortnite, it was just my two sons against each other, and they wanted to team up, but they teamed up against no one. So they were just wandering around this landscape. Like I was watching them. They're wandering around, not shooting each other. And I'm like, I was proud of them because, they didn't kill each other. You started getting involved in the comment section, I see.
I did.
So then I could skip through that section. Wiz is born from Max Payne confirmed. Okay, so Derek says, if I look at skew, it tells me that participants are well hedged for tail risk. Where do I see that on Volland? Okay. You're looking at skew pricing. You're not looking at skew positioning. So this is what you want to see in Volland. Jay, you're sharing. Can you show the all expiration Vana scrolled zoomed out? Can you do cumulative?
Oh, yep. Sorry. Yep. 1 minute. Yep.
Yeah.
There we go.
So this is what I was saying when we're looking at pricing versus positioning. Okay. You see that, right now
just
is priced high.
Really quickly before you jump in, just update for everyone. We've broken or are attempting to break 5,900 on the SPX. So just quick update here before he goes into this
So-
explanation. Go ahead.
So let me see. So if we're challenging 5,900 right now, this was the opportunity I was kind of saying at the 0 DTE up, my verbal 0 DTE update. Buy, to have a close stop, but this is a good spot for you, right? This might be a good spot for you. As soon as you know, if you're an order flow person, as soon as you start seeing selling exhaustion, get on it, right? Get on it. But still long biased, I think, right? We're still long biased.
Yeah, I mean, I'm looking at this. I mean, like 0 intraday, like you're just
We're
like
long
a
biased.
bear. You're like a wall here, right? And I'm looking at the VIX. The VIX is spiking back up from where it was at just even a half hour ago when it was trying to go down, right?
Mm-hmm.
I'm still saying long 5,900 here, but I'm cautious right now. Like I don't like it. We've now tested, and you can kind of notice here we're trying to attempt to put some footing and some support here, but
that's what I was about to say. It looks like more people are buying puts now below the 5,900. Now that can lower your that lowers the line in the sand a little bit when more people buy puts, but it validates the thesis. So yes, there are occasions in which you close at the line in the sand if there's just strong positive or strong selling, but there are puts being bought right now. So
that's what I was
now you might
say.
want to give it a little bit more space than 5,900, but we are, this is a recipe for putting in a bottom and then exploding up, right? And remember, we are volatile. We are, at low aggregate Vana levels. So it may swing higher, so size down, but yeah, people are buying puts here. So we may even dip below 5,900. The line in the sand, technically, I guess, is 5,874, but this is validating the thesis. Yeah, so still be long biased. That's basically the comment that I'm making.
Yeah, especially from a higher time frame. Like I'm not expecting 5,700 to trade tomorrow or post January 1 or anything like that. I again, to me, like if you're intraday trading, you should be happy. You've walked away how many times now using the 25 level, right? I still think like intraday, like we're going to consolidate around like 5,900, in my opinion, is still going to be a magnet. So to your point, like even if we do sell off, like maybe to 5,885 or even the line in the sand at 75, let's call it, like I don't think that's like a trigger here for something for the rest of the week that we're going to blow out another % or whatever. If anything, if we look at, to your point, going back here, like, there's some put buying here. That's where you see these positive Vanas, right? So like it's not a lot, to your point, and could a catalyst rip through this? Sure.
But
DTE,
yeah. It's 0 DTE put buying that I'm noticing. And that's the support that they're putting in. So now you got to give it a little bit more room down from 5,900, but that's those are the bars that I'm looking at now. Those two big green bars. Yeah, that's the support that I'm looking at. And now that they're in the money puts, that means if there is as soon as the buying begins, it will explode as a bounce because that's where the gamma, dealers are going to release their gamma hedges too. So,
especially
it's going to bounce hard. It's going to bounce harder. All right, we're running a little bit low on time, so let's see what other people say.
Sorry, you were explaining
your. Oh, so yeah.
Let me go back to the exposure. I interrupted you.
Yeah. So, so skew is priced high-ish, right, or modest, right? Historically skew, I guess, is like just getting closer to average, but like recent history, it's high. But you can see that there's a little bit of support to talk about that down to what is that 50 what? Like zoom in, like a little bit down, like that. What's that big positive strike right there?
Oh, this right here, or this one here,
57 something. So there is support there, but there's so much negative Vana here, and we could talk about what that is later. It's in the money calls basically. those people who were those annual rolling people didn't want to pay a ton of premium and they're in the money calls, so they rolled into in the money calls, which actually hurts chances for explosive upside for the year. But anyway, regardless, if you want to play for a tail, that's where you start playing for a tail. Those huge downslope, not even a cliff diving skier would touch that, right? That's where the explosion is going to be. And that's when I said, that 5,500 is down in the depths of that divot, right? That's where it is. So anyway, that's why I look at cumulative in addition to individual, because the cumulative shows the it shows the overall picture too. And skew pricing may be high, but skew positioning is low. And that's the disconnect that Volland allows you to take advantage of, because we see the disconnect is low. Not many other people do, right? That's the data that you're looking for. Okay, Jason Smith says you get what you pay for. Yeah. Happy New Year's. Oh, everybody liked our Tokyo and Beijing Happy New Year's, right? Okay, you were. I guess this is when I was going on my Vana soliloquy, right? Jason, what did you study before making Volland? I have a bachelor's and master's in economics, but we do have people. Our back end people are physicists and mathematicians. So, one of our people has a dual master's in physics and math. The other one studied in MIT. So, I mean, like we've got a lot in our. Our team is very, very bright. It's not. This wasn't just me. I guess I'm the imagination guy, but the execution people in the back end are really smart. So. Yes, definitely rewatch this. It's 2 hours, but I guess I don't know who does that, the YouTube or whatever. They separate the parts, but get the Lambo rental. Yeah, only get the Lambo rental to your 10-year reunion, right?
That's right.
I don't know what Lakshya is saying. Please be realistic. If this is your discretionary income, please stay away. And get
here, I want to call that out a little bit. Like for people, like what I loved about Volland, especially once you get the basics down here, is it's easy for any trader to understand, right? And again, I just do my analysis using the Volland platform. I'm not here to sell anything to anyone. I'm just showing you how I use it and the receipts and the trade plans that come out of it, right? So it goes to show you that if you put the time into this, the effort, right? Learn those basics, reach out to Wizard and myself. Like, this is the one thing that's great about the community, whether it's us or others in the Discord, we are there to help you to understand. I'm not going to tell you what to trade, to buy, or to sell. Like, that's not my goal in life. I just want to help you understand and learn. And if you can do this, and, again, a lot of people don't want to become full-time traders. A lot of people become Uber drivers or Uber Eat drivers or DoorDash drivers for discretionary income on top of that, right? So if you found a way to make more money and you don't want to be a full-time trader, like, why not use the same tools and platforms that are available to full-time traders? That's how I've always looked at it. I've never wanted to be a full-time trader, If I did, I would just move to New York and play with other
so
millions of dollars.
We're talking about. I didn't even understand the question. I guess I walked into somebody upset with you because you have a alternate job. I mean, I don't have an alternate job. I'm Volland, and we have an RIA called Ad Funds, and we have our own private fund. But yeah, I mean, so I'm all into Volland, but yeah, for a long time I had another job while we were growing, and it wasn't because we're not spending real money. I mean, if you're spending real money, if you are full-time trading, you need to spend money. It's cost of doing business, right? So you need to spend money to get the right data. But okay, The volume of VS, how much of that is volume is dealer hedging. So we actually did a study on that, and then CBOE also did a separate study. We actually collaborate pretty closely with the CBOE data team, and we both kind of came to the same conclusion, which is about 25 to 30% of every tick that you see of every trade is dealer hedging. With zero DTE, it is larger because a lot of the zero DTE traffic is actually higher order dealers trading on zero DTE options and hedging. So it's about 25 to 30%. As far as categories of trader, it is second highest. Do you know what the highest would be, Jay?
No. Fill me. I don't even want to attempt to fill
Retail investors are about 40%. But the problem is that retail investors are not they're not in conjunction. Like me and Jay right now could have two different, we would be considered retail investors, but we could have two different opinions. So he could be buying and I could be selling, and that's a big part of the traffic. So because they're not in sync, they are less predictable. So that's kind of like that 40%, even though it's the largest portion, it's still the noise portion of the market. So let's see. Jason says, don't need Lamborghinis and bikinis. Well, Jason, I don't want to see you in a bikini. So just need a Volland genie to pay the bills. Again, this isn't magic. This isn't like, this is data. We're data guys. We're not magic. Right. Victoria says, thanks. Here to lean. So am I.
Here to learn. Here to learn.
Yeah, I know.
What I say.
It's dad jokes, man. You saw my kids before. Dad jokes. Come on. Let's see. I jinxed the market. No, I didn't. I gave you opportunities to buy. I did not jinx the market back at 10:30. I gave you an opportunity to buy. Yeah, Saudi Arabia. Welcome to the party, Saudi Arabia. Vana exposure. Volland assumes that when price falls, IV goes up. And when price goes up, IV goes down. Yes, that is the typical spot vol correlation. We do have that correlation chart in Volland. We're running short on time. We could talk. I do have a whole separate video on spot vol correlation. But yes, that is. It's not that we assume that. It's that we know that is more likely to happen. And as you deviate from that relationship, you get more opportunities. But we also with Volland, you could see when that's going to deviate. That's kind of really the crux of what we're trying to find is where are these disconnects between positioning and pricing. Okay, so Jason gets confused with the education right now. Don't worry, Jason. We are going to be releasing an LMS. It's one of my New Year's resolutions is I've got to do more videos. So, yeah, the Discord community, we're talking about that. What will be the next possible volatility catalysts for January? What does January look like in terms of further out SPY expirations into the end of January? Obviously, January 22nd. So you're talking about January OPEX.
I think catalyst-wise, CPI, inflation is still very much front in mind, and we had our sell-off a couple of weeks ago at FOMC because of that. So I think CPI is still going to be important in January, and then I think NFP numbers will still be critical as well. So
ultimately for me, I think the big catalyst is honestly what you see in Volland. I mean, what was it? Not yesterday, the day before, you didn't need a catalyst. We've dropped 110 points, right? And what you see in Volland is we are going to have a volatile time. There could be a catalyst, and it's things to look out for, CPI, and things like that. But I think right now, we're at a low aggregate Vana time frame. We're going to see a lot of volatility, not a lot of put support right now. I think that the biggest catalyst problems will be things that we don't see. Like an unexpected kind of thing, maybe, something geopolitical or something like that. So I think that's the biggest, thing to watch out for. It's not, yes, pay attention to the catalyst. The FOMC is a big deal. Whatever decisions they're making, the BOJ is a big deal. Whatever decisions they're making, whatever Trump says, because Trump is going to do an about face. His administration and policies are going to do an about face. So, yeah, I mean, that's kind of that's what to think about, is because many catalysts you won't see, and you have to be positioned in accordance with Volland on how other people are positioned. You want to, honestly, you want to go against the customers and with the dealers on positioning. So, Ken's watching this stream. I think so. I think Ken Griffin is sitting there taking notes. He's like, how should I be hedging differently? What am I doing? Yeah.
Yeah. We've officially, just FYI, while you're speaking, cleared 5,900. Now we're at 58.95. So, and you can see, like, even those 5-10 point dips here, like, they're just strong buyers. Like, you got wicks to candles. So, as earlier as we said, like, there can be a little bit more selling here, but we're finding buyers, right? And I think as long as you're north of that 58.75 until at least next year, like, I think you're in a safe spot. The market's just consolidating, waiting for a larger move. But, let's see how the rest of today plays out.
Well, in addition, just be careful. There is going to be, what we've seen actually the past couple of days is 0 DTE put traffic coming in. Now, those are still cheap Greeks, but that is support also. And, they're not closing out. They're in the money puts either. So we're going to dip below and then fire. That's kind of it's like a slingshot whenever you see that extra put support. When you have put support, you're just pulling it, those angry birds back just a little bit further, right? So anyway, that's just, keep in mind. And you can sit there and put support all the way down, so you got to exercise good risk management here. 100% of the community. Ken's watching. Yeah. Teach the kids how to do this so they can pay for their own college.
That's right.
I mean, here's the next thing too is no matter what, expect to lose when you first start. You're not going to understand everything all at once, so you kind of have to expect to lose. So I'm not giving them their college fund. No way. Jay, why do you prefer ES options to SPX? Is that just because?
No, there's real reasons. I can trade it essentially every minute that ES is open, right?
Oh.
So I think it happened earlier this year when I made the switch, Wiz, and it came upon the first. No, I think it might have been that August 5th or no, it happened earlier in the year. I forget. It was a BOJ moment, right? I'll just leave it at that. I'll look into which one it was. But we sold off like end of day. There's rumors, and we sold quickly. And then like overnight, like just in that hour after the market closed, we sold even more massively, right? And then when the overnight futures market opened at 6 p.m. Eastern, we sold even more, but we hit like 57.50. I remember the level. So it's like now in my head forever. We hit that level in overnight action, and that caused like a 200 to 300 point like spike, into the next day, or 200 point spike it was, I believe. But where I'm going with that is I had the right idea to short it, to take it to 57.50, and I had SPX, and I was up, I think it was like 6 or 8K, and I had the right thesis, the right plan, but it hit a key critical level. And the next morning when we came back, was what had happened to my options. They're basically almost worthless because we had, rallied out of that key zone. So I trade ES because I can trade at any time of the evening, day, etc. I can do pre-market. So if I want to trade a data day, 8:30 data is coming out or something along those lines, I can do that. I don't have to hold a position overnight or the day before, the market closes. So there's just more flexibility. And the second reason, like I said, there's no like settlement like you have with XPX contracts, right? Where you got to wait the next business day for your funds to come back to you. With ES contracts and options, You go in, your money, it settles immediately, and it's available right then and there to start trading again. So it lets me do, especially in a week like this, where I want to hit target to target to target, I can enter, exit, wait, enter again, and exit again. And I can keep doing that with my account. Hope that explained it.
Yeah. All right. Okay, next one. Could hit the show on this one. We have data on options for futures. That's coming. We have the data flow coming in. We're doing futures require different calculations because each expiration is its expirations is its own underlying, so it's a little bit different. And do we have a recommended back test strategy? Do you, Jay, have a back test? Guys, mostly Excel. Like,
yeah,
I used to use Option Nets Explorer, and I liked it. I
mean, a lot of mine is I have my trade plan. So before I start my next day trade plan, I review it, right? So I go back, I look at it every night. I look at my weekly plans, I review those. I adjust, any strategies, something I was wrong about, something I didn't know, something I maybe learned in the Discord, right? So I'm constantly tweaking it. I'm back testing it. Like, to me, if you're not back testing, you're not doing trading right. That's how you learn, is to back test and to then refine your strategy.
Yeah. Like I said, I am a Frankenspread kind of guy. The way I look at markets is I look at what risk am I willing to accept and what risk am I willing to, or what reward, what thesis am I looking to expose? And so because of that, I use the historical Volland. You get every half hour you have historicals. I use the historical feature in Volland and test. Like I pick a random day and I say, okay, on this day, looking at Vana and looking at Gamma, whatever, what trade would I make? And I put a trade down, and then I look, forward a month and say, how did I do? Or if it's something that I have to monitor, I will, scroll through, each day or half hour or however your, whatever your time frame is, and say, oh, look, I would do this here and do this here. And that's my trade plan. And if I would form my trade plan, I would form my stop and profit taking. And, so for me, the answer is Excel, like, because I don't do a mechanical, I am selling the 20 delta every day. If you do that, then you can use ORATs. But for me, it's, with my Frankenspreads that I change all the time, it's Excel.
Yeah. I mean, I think at a minimum for
Option Net Explorer, I like, it cost money, but I liked it.
Well, and just a call out, if you're just looking at for something like, especially to track your trades and learn from them, like just type in like trading journals or diaries in Google. You'll find a bunch of them. I don't want to recommend one specifically and play favoritism, but you'll find some options out there. Some integrate directly to your broker so that like you don't have to manually feed it data. But there are options out there. At a minimum, at least journal your trades. Like, that's what I do with my trade plans on a daily and weekly basis. So I journal them. I know what I'm doing, how I executed them, and then I review them. But start there. Don't even, keep it simple.
Yeah. All right. Trade for tomorrow. How many more comments? Oh, I'm all right.
You're almost done.
Oh, this one. When is exactly lunch hours? It's confusing sometimes being in Europe. When you wake up. Actually, no. So I guess
to me, it's like right after those London hours, right?
Yeah.
So like once London closes, I think, what is that?
London closes, we're at lunch. Yeah.
Yeah. So once like London closes, to me, like I'm not taking any serious new trade at that point. Like, will I trade? Yes, I'll trade smaller in size. More times there'll be lottos if I'm doing something intraday, but you just don't have the same firepower unless it's an FOMC like day where you have a catalyst and news breaking and so forth.
Yeah. Somebody asked, do gaps in SPX really matter? not the way that people think they do. Like, oh, it's a gap, it must be filled. I don't look at it that way. But gaps do matter because gaps are the easiest way to cross Vana strikes, really, like big Vana strikes. The the overnight when it's illiquid, but you would, I don't want to say the gap gets filled, but if you're crossing big Vana strikes, you're more likely to to come back. So
yeah, I mean, I would just say I'll add in there. I think ES gaps are more important. Like if you gap in futures, like something something happened, right? Like that's
right.
wild to be gapping in ES. So if I do see a gap in ES, like more times than not, it will fill itself, especially that given day. It doesn't like to leave gaps for too long. Some liquidity there. So if I see a gap in ES, not SPX, I'll care more. But SPX gaps, like I mark them as references, but I'm not going to go put my bank at risk here on a gap fill.
Yeah. Yeah, just for the fact that there was a gap. Jay, you based out of Houston, so on 0.7 wants to dox you.
Yes, I'm definitely in Houston. Yep.
He's in Houston. Bomb Houston.
Yeah. Called SWAT there.
All right. Let's see. No, we're getting down to 5,900. Everybody, do we have intern positions? No, not right now. Not that I know of, but yeah, no, not right now. Facts. Let's see. The VIX looks steady. Say something about yen and risk sentiment. All right. So now we're talking macro a little bit. The yen will be, the BOJ. Japan is finally seeing a little bit of inflation. It may be stagflation. I don't know how much of it is economic production, but they are seeing a little bit of inflation. So the BOJ is, as we kind of say, like Jerome Powell has like that itchy, dovish trigger finger. I think the Ueda has the itchy, hawkish trigger finger. But I think that it will have the whole yen thing will have a little bit less of an impact as long as Jay Powell is being a little bit more hawkish. Because if they're both going in the same direction, you won't have as much. Both BOJ and FOMC going in the same direction, you won't have as much problems as far as carry trade. But there still will be a problem because that the yen going up will have more of an effect than the FOMC interest rates going up. So that's my quick yen comment. Oh, I'm scrolled to the bottom with all the comments, so I guess BOJ after best option backtester is on demand and thinkorswim. My only problem with on demand of thinkorswim is it takes so long to load.
I mean, it's such a strong platform, but I am like a design UI, like
yeah.
It matters to me, right? And I just sometimes just want to bash my head. But he is right. It's a good platform, but it's so slow and so old.
Yeah, it takes forever to like. I want to load 5 minutes from now. It's like calling. It's like But anyway.
Oh, what the hell?
Yeah. So anyway, I guess we've reached the end of our comments. I think we did a stream. I guess we'll do one quick last.
There was one question I saw in here. Where in the Discord am I located at? Let me, if you don't mind, I'm gonna just
go ahead.
quickly show. So for everyone who's in the Volland Discord, so you've got this section here called the Volland Edge Extractors. So there's a little bit about us here, but you'll come in. Our weekly plans will be provided here, and you can see all our receipts, all our analysis. They stay there, so you can learn from them. You can call me out when I'm wrong if that's what you're into, or you can help correct me or share your opinion is how I would rather have you look at my trade plans than just argue with me, but I'll leave that at that. We also do daily plans. While we've been here just during the holidays, we've been kind of on break with daily plans, just kind of using our weekly plans. But today, at the beginning of this, I showed you one of our daily plans. But for this is for those who are literally zero DTing, right? You just want to know what's going to happen that day in terms.
You got Satan up there in your zero DTE plan.
I did. This
Satan
is
Powell.
Satan Powell. That's right. This was the day after FOMC, of course, right? So he brought hell and fire to the markets. But that's where you'll find us. Captain Wick here, who's a good partner of ours, he'll come in, he'll do his analysis on QQQ as well. So it is not just ES or SPX, but we also do provide QQQ. And from time to time, if I see a really good trade and I have the time to build a trade plan for you all, then I might do individual tickers as well.
Yeah, we also do like earnings plans too. Earnings is maybe we'll do another live stream next earnings season, because earnings, you could see some big time. There's a lot of edge in Volland in earnings. And I know the people out there that like to get rich quick and make a lot of money really, really fast. Earnings is a nice spot for you, right? But Volland will give you edge, won't give you risk management, but it'll give you edge in earnings too. So, yeah, I guess, I guess that's it.
Yeah, I mean, just parting words here, just a final analysis. Like, I mean, you flip 5,900, you kind of saw, like, look how now massive this is on the weekly. Like, keep this in mind here now as we go. Our magnets, like, I'm looking now here at price, right? Like, yeah, we might consolidate, find some balance here at 85, for example. But this is where I'll at least start looking at as a target, especially if you have your VIX increasing as I'm seeing here. So wanted to just share some final analysis.
Yeah, it looks like, so there is continual put buying support. Keep an eye if hopefully you got Volland, keep an eye on the lines in the sand, either at the top point or at the extreme. Usually we will get a strong bounce. So just be patient. You're going to see, as put support is increasing, you're probably around that 2 o'clock, that dealer, a dealer o'clock, as we call it here. That's, when you will see a real good explosion from there. So, that's, I guess, the last analysis. Before we go, thank you everybody for attending our live stream. We got quite a few viewers, and I'm very very happy to see that. I hope everybody had a happy holiday season, and just know that every hour when you are celebrating it with you, right? Literally, we will count down at your New Year's, unless you're after London. And then, all you Spanish, I guess those people in Bermuda and even the people here in America, we're not celebrating with you. So we're sleeping through your New Year's. But yeah, we have New Year's for everybody. Happy New Year's. Hope you make some good, solid resolutions. And I hope for a happy, healthy New Year for you. And may Volland help you in your future trading ventures.
Happy New Year's, everyone.